Welcome to the fixed income outlook for the month of March. There are certain popular questions which we want to address at this point of time. The first question is, how do you see the risk of Iran war on oil prices? We don't have a definitive answer to this question. What we know is that if it takes longer for the war to resolve, then each passing day will increase volatility in the markets. The Strait of Hormuz is very important, and the spot market becomes very tight if we don't have the supply chain running. Therefore, we'll have to watch the situation, but this is an imminent risk from India's perspective. The second follow-up question is, if oil prices move up, will it force RBI to tighten monetary policy? I think monetary policy works more on the demand side than on the supply side. And what we are getting from oil price perspective is a supply shock. And any tightening of monetary policy is not going to help in terms of easing the oil situation. So there our view is that RBI will not tighten monetary policy under these circumstances. So the third question obviously is, what is the best portfolio strategy under these circumstances? So there our view has been very clear. We like the short duration assets, the very short end of the yield curve, which is up to 1 year assets. And I think, if volatility increases due to oil prices, I think the short duration will remain the best risk reward for investors. It also gels well with our economic cycle construct because we expect that economic cycle is progressing ahead. So if we combine the two, it's a very clear answer. Be invested in the short duration curve. The fourth question is, what about long duration assets and SDLs? We think that long duration and SDLs are defensive part of the portfolio, provided they are hedged with 5-year OIS. In a scenario where oil actually moves higher, what we believe is that the 5-year OIS will move up much faster than the long bonds, and therefore the hedge will create kind of safety on your portfolio. So we think that long duration assets hedged with OIS is still a very good strategy. To summarize, there is definitely a risk which has come up due to the Middle East war, and we don't know what the actual outcome could be. But we would advise investors to provide that risk in their portfolios and be invested in the short end of the curve. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.